Markets are testing major support levels as the Fed still has 3 more weeks to go before they come out with their most recent decision on rate hikes and terminal rates. Every time they meet, they keep raising the terminal rate for the Fed, meaning where they're going to end up. Now people are talking about 6% on the Fed funds rate versus 5.6, 5.5. So we will see as more and more Fed speakers are going to start to come out in the next week or two ahead of the Fed blackout. So they've got probably about 7 days to come out and make their statements. One of the things that is getting a lot of pushback is, talk of the Fed coming off the 2% inflation target, raising that benchmark, but they are not going to give up on that. They've already given up enough credibility as it is. If they raise their inflation target rate, then it'll be lights out for the Fed, but they are already as uncredible as they can possibly be. They have lost their credibility with the markets. Markets are still expecting the Fed to pivot, pause, all that good stuff. That's why they're hanging on right now. And this is midday. Markets still have a few hours left. And again, it's always about the momentum into the close. Markets started up a little bit today, back down, and they're kind of just hanging out right now with the Dow up 0.39, S&P up 0.57, hanging around that 4,000 level on the S&P, and the NASDAQ up 0.92 right now. In other news, a lot of homes went under contract when the rates dipped back in January when we saw treasuries fall, but they have since rebounded, so the market is cooling off once again. The big thing is there's still a shortage of houses. The housing market is still under pressure in a lot of areas, although some areas are seeing inventory levels rise and seeing prices come down from highly distorted levels that we saw last year. But in general, on average, there's still lack of supply. So builders are scrambling to get land so they can start building. Great time to be building homes if you're a developer or a builder, because there's just nothing for sale out there in a lot of markets, and houses are still selling relatively quickly in some markets. Although with what's going on here lately with the rates, let's take a look at the 10-year marching up again close to that 4%. That's put a lot of pressure on rates, headed back to that 4.3% range. The 2-year has reached levels not seen since 2007, I think it is. Let's look at the U.S. 2-year on bonds. Let's go to bonds. Let's look for the 2-year bond. Here we go. The U.S. 2-year at 4.789. Let's look at this on a weekly so we can take this into perspective. And right back in here, 2007 was the last time rates were this high. And we all know what happened then. Prior to that, it was 2000. And you can see how rates have kind of come down really since 1989. They've been steadily trending downwards, and be neat to kind of, I guess this was right on trend there. If you drew a line, not really meaning anything, but just kind of interesting how these trends can unfold on things and how some things will respect trends. But yeah, not really a whole lot to look at there. But what's interesting is the level that the treasuries have reached on the 2-year. Again, not since 2007 have we seen that. July of 2007. So let's go take a look at the S&P and what does that July 2007 timeframe look like on the S&P. That would be right about here, right in this area here. So that July 2007 timeframe was right in here before the market finally rolled over and reached rock bottom after the bank. This is when the bank started failing. Government failed to pass the debt, increased the debt ceiling. So, the government shut down, default, all that stuff was the talk, at that time. Then banks started failing. This was around that March, April, May, June into the summer. So kind of, in this area here before everything started rolling over is when those rates hit all-time highs. And so does that mean we're going to see this roll over kind of similar to what we saw back then? Not necessarily. Let's take a look at the Dow here. Continuing to just kind of range, although it is now testing this level here. That's the last really critical support level for the Dow before it starts going back down and heading toward those October lows. This is the main level that the Dow kind of needs to hold right there. And it's checking it right now. Let's see what this looks like in terms of moving averages. And that is the 100-day moving average that it's wrestling with right there. headed back down for the 200-day. And these are critical technical levels that the algorithms are plugged in with, the 200-day, 100-day, and 50-day moving averages. If this, then that, if it holds support, if it breaks support. Right now, the NASDAQ found support on the 200-day moving average, caught a little bounce, struggling to maintain that momentum. We'll see what happens the next time it comes down to check. If it breaks, then obviously headed down to check lower levels. And this little area of support here for the NASDAQ right now, S&P right here found support initially on the 50-day, lost it, rejected. Now it's finding support again on the 50-day and the 200-day, kind of working in that area. And then if we go look at the weekly, still above the 200-week moving average, but wrestling, under the 100, wrestling with the 50 on the S&P, the NASDAQ losing the 50, finding support on the 200, and the Dow right there finding support on that 50-week moving average as well. So interesting action for traditional markets. Let's take a look at how this plays into what's going on with Bitcoin right now. We'll remove that. And we'll put this on the Bitcoin chart, and you can see we had that 50, 200 week moving average death cross. What does that mean for Bitcoin? We don't know, because this has never happened for Bitcoin, being such a young asset, not enough price history. The big thing to take a look at, though, is rejecting on the 200-week moving average and now staying below the 50-week moving average. Again, that's not something that we've seen on Bitcoin, other than going back to this 2014 timeframe, 2015 timeframe right here, where Bitcoin rejected on the 50-week, continued down, but it found support on the 200-week. Again, price action, has always found support on the 200-week moving average for Bitcoin. Broke below briefly in the pandemic, but pretty much that's always been the major support level for Bitcoin, and now it is rejecting on those levels. So just a matter of time to see how this is going to play out, if Bitcoin's going to kind of continue to work its way down to recheck these lows that were set back in October, November timeframe. So we'll just have to wait and see how that shakes out. And again, the Fed still has several weeks before they're going to meet. So right now, with the economic indicators and the economic data that's come out over the last couple of weeks, with the labor market and everything being as strong as it is, economy being strong, prices still continuing to rise, we're getting into the spring and summer months where you could potentially see pressure on gasoline prices and things like that. It's going to give the Fed a lot of ammunition to want to go 50 basis points instead of 25. So the markets haven't quite priced all that in yet. They're kind of working their way towards it. Still have 3 weeks to go. Still have a lot of Fed speakers coming out. And there's still a lot of liquidity that needs to be put to work. So investors, fund managers, they're going to take advantage of the volatility between now and the Fed meeting. And then if we do get 50 basis points, then it's likely that markets will go down, retest the October lows, and then we can see where things go from there, whether they hold or reject. So these are the things I'm looking at. This channel is all about entrepreneurship, real estate investing, real estate development, macro investing in the markets. It's all about starting businesses, buying businesses, growing and scaling businesses so that you can generate cash flow to invest in other assets. It's one thing to make a bunch of money. It's another thing to keep it and grow it. So that's what this channel is all about. It's all about building wealth for generations, not only for yourself and your family, but to have an impact on the world and the community around you so that you can do the things that you want to do, have the impact that you want to have the impact, and to give back and help in ways that you want to help. So that's what this channel is all about. I'll see you in the next video.